Okay, now before the break I was talking about trading in seconds and minutes. So these are the three strategies you can pursue here, okay? For those of you who are not suited for seconds and minutes, you go for hours, okay, and days. Basically, this is what I call swing trading. Okay, now. So if you're trading days and weeks, it's swing trading. Okay, majority of people like to swing trade. I don't know why. Okay? Then they got what? Then after that you got what called positional trading. Positional trading will be weeks, weeks and months. Okay? So you can only know your style of trading when you actually have your psychological data that you analyze. And that to me is the most accurate way of assessing whether you're suited for seconds, minutes, hours, days, or weeks. Okay? So don't be like many people out there, they just make a guess. Oh, trend trading, wow, it's everybody doing it, so I joined the crowd. You know. By the way, joining the crowd of what called herds mentality. It's the one that really got slaughtered by the market. Good example is Robin Hood, you know, who indulged in what I call the AMC, the GameStop, right? Okay. After we got whacked, they got to put in $2.8 billion just to top up their capital. Okay. Okay. So sad to say, that's a fact of life. Okay. I mean, look at Bitcoin. When Bitcoin was about $8,000, $9,000, very little interest. But the moment you break 10,000, 20,000, all the people just jump in, right? Okay. And of course, the unscrupulous hedge funds, they flame the excitement, okay, and the momentum, right? Elon Musk, okay, commit 1.5 billion of Tesla capital, you know, to Bitcoin. As a result, you find that the price jump up to $60,000. Okay, now. So today I was looking at the chart. It closed about 58,000 plus. Okay.
So, Dr. Hu, does it mean that if you can do seconds and minutes, then you should be able to do hours and days?
Of course. I'm a very versatile trader. When market condition require me to trade second or minute, I trade second. But I'm a day trader. In other words, I always close my position before the market closes. Okay. And I trade the US market, it closes at 4 o'clock. Offer, don't wait until 4 o'clock, I close probably about. And later is 1 o'clock. Okay. See, the common mistake of most people is they trade on sniping strategy. And they encounter losses. Don't worry, I carry my trade the next day. Then becomes swing trading. Absolutely not right. You know, if your strategy is not working, what makes you think that your swing strategy will work? It works only when there's a luck factor there. But question is, can you depend on luck all the time? Right? Sure. Ladies' luck, okay, make you profitable for a couple of trades. But in the long run, is it sustainable? Yeah. I can show you a lot of statistics for fund managers, right? For me, I work with fund managers, so I know. Okay. I've seen statistics of fund managers. You know, And the moment I look at the statistic, I know whether this guy is a good fund manager or not by looking at the data. Okay, now, how I know? I calculate the ER. Okay, now, just to illustrate this point. Let's say I got fund manager A and B. Okay, now, I show this to you because I want you to understand. Please don't be conned by all these people. Okay? Let's say fund manager A. First trade, he makes 22%. Okay, now, this guy makes 8%. Okay? Same fund manager, right? Next trade, he lost 30%. This guy makes 8%. Yeah. Next trade, this guy makes 34%. This guy makes 8%. Next trade, he lost 10%. And this guy makes 8%. Okay? And let's say the average return of these guys cannot is let's say 22.5. Cannot. This guy average 8%. Now, who do you think is a better hedge fund trader? A? Who say A? Who say B? One. Put your raise your hand. 1, 2, 3, 4, 5, 6. Why B?
Consistent.
Consistency, yes. Okay? So the moment I look at A, I know this guy is not. The rule of the game is low return, consistency is better than wild return, fluctuation. Right, okay? So that's the reason why when I put in the trade, rule number 1, risk management. Rule number 2, I have the edge in my side. Rule number 3, I go in with precision. You know, precision. Precision entry. Now, what is precision entry? What is precision entry? Anyone?
High probability.
More than high probability. Okay.
Show me.
There's no such thing as sure. I beg your pardon, no such thing. Really always lost. Optimum entry basically means 2 things. Okay, here. Right. Now these are live charts. Huh? Okay, you look at this 1, 2, 3, 4, 5, 6 candle here. You know, right? What does this 6 candle tell you? Anyone? Bullish? Strong momentum, right?
Yes.
I would say 90% of people will jump in and enter the long trade, right? Because they think it's optimal, right? They think it's precision, yes or no? Yes or no? Yes, right? For me, as a precision entry, I will wait for this signal. Look at this candle here. Yeah. Right? Look at this candle here. It's a very strong reversal candle, right? Yeah. Okay? Which means to say that this was correct. This bullish swing was what the market is telling me. You know. So precision entry basically means the signal here, right? Okay now. Validates that this swing is continuation, right now. The entry here is precision. That's what I mean. Okay now. Understand? Or you don't understand? If you don't understand, I can repeat again. You understand? Don't understand?
Don't understand.
Okay.
Candle appeared.
Trading is very simple, right? precision entry is something that is an art that you must master. First precision entry is what the market is telling you. Yeah. Okay? What the market is telling you. This is a strong uptrend. Yes? Yes? Now if you just follow what the market is telling you and you enter, then it's not precision. Yes or no? Why is not precision? Because you are following the crowd. Okay, you are one of the, the 95% traders. To make money for the market, you must be different. You must have a proper setup. You must belong to that 5 to 10%. You can know when to enter precisely. Yeah. The market stand, everybody knows what. Okay, market is going up. Yes or no? You enter here. The market turns. This one. You take away your stop loss. You are the loser. Yes? But if you are a trader who understands markets, and you know that markets will always correct. Market will always move back. Yeah. Okay. Minimum pullback 2 to 3 candlesticks. Yeah, that's a rule. Okay. Right? But the problem is the moment you pull back, people who enter here all lose money. People enter here all either cut loss or break even. Right, okay, or close the trade. Okay, whatever. But the smart trader will wait for this pullback. And they know that the direction of the trend is up. Right? So that is what the market is telling you, okay now. So why don't you wait? Wait for the signal here. The pullback signal. To tell you to enter here, okay now. Right? Okay? And the moment you cross here, you are right. You are absolutely correct. Okay now. This is what I mean by precision entry now. To be a precision entry, you must know your candlestick signal, you must understand about candlestick formation and the fingertips. You must know this is, there's no guesswork here. Okay? Either you know a candlestick reversal, okay? Or you don't know. Period. Right? So that's the reason why I wrote this book, 8 Candlesticks That Matter. Right? Okay? You must master the 8 candlesticks. Okay, to be able to trade precision. And the moment you put in this trade, what I call precision entry. Your precision entry at the correct momentum, and you see that the market will just follow the uptrend. Okay? Trading should be as simple as possible. Shouldn't be very complex. Right, okay now. But the problem is people make it very complex. Why they make it very complex? They look at MACD, they look at RSI, they look at stochastic, they look at Bollinger Band, they look at I don't know what I look for. Hey, by the way, I teach all these things, many years ago in my advanced technical analysis program. I teach everything. I even know how to reverse MACD stochastic. Just chaining the perimeter. And if you change the parameter, you got different result. So I hope I explained precision entry in a couple of minutes. Okay, right. The last aspect I want to talk about is really to share with you a couple of things about the markets. Now, before you actually look at the market, you've got to have what we call a trading plan. I'm not going to go into detail about trading plan. Some people got one-page trading plan, some people got 100 pages. My trading plan is about 150 pages, right, okay? Which is very precise, okay, which has many strategies, how to trade the market depending on what market condition and all that. Okay, okay? If this market condition, this is the trading plan. If this market condition, this is a trading plan. Okay? Right. Trading plan also includes about yourself, understanding of yourself, understanding of your psychology, what's the best method to trade, and all that. Okay? What's the best time to trade, what's the worst time to trade, and all that. Okay? It is very comprehensive. Okay? So you must have that. The second thing you must have is before market open. Yeah. Now, how many actually has before market open ritual? How many of you? Be honest about yourself.